Hello and welcome to another video. In this video we will be looking at 5 stocks you should buy and never sell. These are stocks that will pay you passive income through dividends and will grow over time, so in the long run with investing your dividends back into them you should make a lot of money. These are my opinions and you should always do your own research before investing your money. The way I have chosen these stocks is through looking at their earnings, payout ratio, dividend growth and yield, and past and potential growth. The first stock is Apple. I'm sure you have all heard of this company, and I have made a separate video on Apple which you should check out for a more detailed look into this. I will link that video down below. Apple is one of the biggest companies in the world, and I'm sure you have at least one of their products, and if not, you definitely know about them. They make devices that millions of people use on a daily basis and also rely on, especially in the current climate. The potential growth of this company is incredible, especially with how they have started to branch out towards more service-based sales such as Apple Music and TV. The company has year-on-year revenue growth, and I can't see it slowing down soon. It is also rumored that they are working on entering the electric car sector, which shows they are diversifying the company to even more streams of revenue. If they do well in this, it could be huge for the company, as they are already a large reputable company, so people would be inclined to buy their products such as an electrical car if they made one, as they would think it would be good quality. The second stock I think is a good pick is Microsoft. This is another big tech company and has been around for a long time, just like Apple. The future is all about technology, and that's where I feel investing my money is best for safety and growth. Microsoft has grown nearly 20% per year in the last 5 years and is estimated to do nearly the same over the next 5 years. It is marked as a strong buy on Yahoo Finance and is marked as being undervalued at its current share price, which means it is a good time to buy. It had a small dip due to the pandemic early last year, but recovered quickly and continued to grow. You may have noticed that both the companies mentioned so far, and Apple and Microsoft, are big well-known companies, and that is where I look to invest. It is a lot safer to invest your money, which makes it great for beginners, and they also both pay dividends. These may be low yield, but there is room for growth. The third stock on the list is not a tech company like the first two, but it is just as big. Procter & Gamble is the biggest consumer goods company in the world. You may have heard the name but may not know exactly what products they sell. However, Procter & Gamble owns some of the biggest companies in the world for their sector, and you will definitely have heard and even used their products. They provide consumer goods all over the world with brands like Gillette, Tampax, Oral-B, and many others you can see on screen. The reason why this is such a good investment in my eyes is that they are providing products that are always needed. When the world stopped last year and businesses closed down, everyone was still purchasing products from these companies, as they cannot live without them. It is marked as a buy on Yahoo Finance, and again estimated they be below the average share price at the moment, so it is a good time to invest. The fourth stock on this list is Disney. If you haven't heard of them, they are a company that was founded in 1923 that creates entertainment films, mainly including animations such as Mickey Mouse. They have also created Disney World amusement parks around the world, which attract a lot of tourists. The company have, however, cut their dividends, but they did grow by 22% in December alone, meaning they are still an attractive company to invest in. They have also recently released Disney Plus, which is a streaming service for films and series that they have created. This surpasses expectations for estimated users signed up so far. They are also starting to release films exclusively on the platform, such as upcoming Marvel films, which I feel attract more customers. Despite not currently paying dividends, I feel like they could potentially come back soon, and the potential growth of this company alone means I feel like this is a good company to invest in, and also safe, as I can't see them going anywhere soon. The final stock on this list is Pepsi. You probably know Pepsi because of their drink. Obviously, this is something that is incredibly popular and would be worth investing in on its own. However, They are like Procter & Gamble in the fact they also own quite a few other brands you will have heard of but probably didn't know Pepsi owned. These include the like of Doritos and Gatorade. These are just two of them and there are many others you can see on screen. These include brands popular all over the world. This diversification has made them a very good stock to own. They also pay nearly a 3% dividend, which is very attractive to many investors. They are also currently cheaper than the average cost according to Yahoo Finance, which like the others on this list makes them a good stock to buy now. All the stocks on this list recovered very quickly after the initial dip in the pandemic, so even world-changing events don't affect them too much, so holding them for a long period of time should be the goal. They will have ups and downs, but over time you should see steady and consistent growth. This includes income from dividends, which if reinvested over time you will see a real snowball effect and your money will keep going up and up. If you have any questions about these stocks, please leave them in the comment section below. Thanks for watching and remember to subscribe for more content.